Well, hello, good people. This is Christine Jones, proud owner of Clear Choice Financial Solutions LLC out of Egg Harbor Township, New Jersey. Now, if you are listening to this by way of our podcast, What's the Score? Then you are listening to episode 23. If you are watching and listening via our YouTube channel, then you will know that this is just another in our series of educational and informational videos. If, however, you are watching and listening via Facebook, then you will notice that I am going step by step through a post that I created about the topic pertaining to what is happening with this GameStop issue. Now, that will probably bring about a question for a few people. Well, I thought they were a credit repair company. So let me qualify something. We at Clear Choice Financial Solutions LLC definitely handle credit maintenance, credit building, and credit repair. However, that is not all that we do. We also are a resource for information, education, and other types of products and services relating to not only credit, but also other financial issues. So, therefore, we call ourselves Clear Choice Financial Solutions because we typically have a solution for you. Okay? Now, let me then say that yes, I am going to try to explain this whole GameStop, Robinhood, hedge fund, etc. issue that has popped up over the past few days. And if you are, somebody who doesn't necessarily pay attention to the stock market and trading and investing and all that, you're probably like, well, what in the world happened? So I'm going to do my best to explain this in a way that everybody can understand. Now, I am reading a little bit from the post that I created for Facebook because there are so many parts and pieces and players to this, I don't want to forget anything. But I will not just be strictly reading, as you will see. I will be actually adding some information. So it will be very informative, I hope. I also hope that I can get out of my head what's in there and transfer that to what I'm saying so that you understand it the way I understand it in my head. You know how sometimes you go to explain something and you fully understand it, but by the time it comes out of your mouth, it's like, you just confused your own self. So I'm going to hope that I do a really good job of explaining this because there's a lot to it. All right. So let's go. Now, for those who are actually looking at the video, you'll notice that as I scroll up and down, you'll actually see that what I've written is attached to a video that I shared from Trevor Noah. And it's actually a kind of weird video. He's superimposed his head onto someone sitting in a bathtub, and they're talking about this GameStop issue. However, it is brilliantly informative in a brief way. I just want to go a little bit further and explain a few other things, but it's a brilliant video. I really like it. All right, so let's begin here. This whole thing is really about options trading. So, what is options trading? Now, options trading is really a contract that gives the option, not a mandate, to the holder of a specific asset to buy or sell that asset at a specific price on or before a certain date. Okay? Now, if the holder opts to buy, then that is called a call option. If the holder opts to sell, that is called a put option. All right? Now, I'm going to put that to the side for a moment. At issue here are a few companies. GameStop is the major one that's being focused on, but there were other companies, AMC, BlackBerry, Macy's, and all of these companies have one thing in common. They're on the decline. For whatever reason, they are not performing well. They are losing ground. Now, some are, were on the decline before the pandemic, but some have really suffered because of the pandemic. Now, in the case of GameStop, you have to imagine GameStop is a company that, you can go to these little stores and buy actual physical games. But as we know, downloading of games is becoming the norm. So a company like that is going to automatically probably start to lose some business. Therefore, the shares are going to lose value. Okay? Now, that is what was going on here. So these companies are on the decline, and of course, the shares of these companies actually follow suit. They're not worth as much as they used to be. Now, in the middle of this are opposing sides. And these opposing sides are often referred to as Davids and Goliaths. Now, if you are familiar with David and Goliath from the Bible, then you kind of may understand where this is going. David in the Bible was a little shepherd boy who actually went against a giant who was taunting and tormenting the Israelites. And he was a Philistine, and his name was Goliath. Everybody else was afraid of Goliath. No one else wanted to go against him, not even the king of Israel, not even King Saul. And David decided, you know what? I can't take this any longer. I'll do it. So he decided to go against the giant. And initially, the king was going to offer him, his armor, his weapons, but they didn't fit David. They were too big. Now, if I may interject this is a moment where you will fully understand that if you are called to do a certain thing, you are also called to operate in your particular gifting, using your particular gifts, skills, and talents, not somebody else's, because they won't work for you. So David decided to use what he's always used: a staff, a slingshot, a few smooth stones that he got from a rippling brook, and he stood against that giant. And as the giant was taunting him and laughing about the fact that this little and young person was going to stand against him, David took that slingshot, filled it with a smooth stone, and aimed that thing and struck the giant right in the center of the head. And of course, that was the end of the giant. Now, you know me, I always like to do some lessons, so I'm going to also interject this. It doesn't matter how big your giant is. When it's you and God, you are all you need to win. And so the giant was struck dead, and of course, David was a hero. Not really to the king. The king was jealous, but that's for a separate moment. So, getting back to this whole thing, the Davids, or the little guys, in this case, were a group of Reddit amateur stock traders called the Wall Street Bets. The Goliaths then included hedge fund heavy hitter Melvin Capital and some other hedge fund companies. Okay? Now, the Davids, or the average traders, typically get tired of being treated like the little guy. And that means that they're often cut out of pretty lucrative opportunities. And sometimes they're cut out of things known as initial public stock offerings. And, you might see the IPO mentioned, okay? So typically that's an initial public stock offering. So what is that? An initial public stock offering is when a company which has been private actually becomes, a unicorn status company. So what does that mean? That means when it reaches unicorn status, it has reached a valuation status of approximately $1 billion. They typically, go public. Once they go public, those private shareholders, as long as they keep their shares, end up really receiving sizable gains in the value of their shares because typically the public market valuation is a lot higher. All right. And we kind of saw this when Facebook went public. Once it went public, phew, people began to become millionaires overnight. People who just, had a couple of shares here. Maybe they were, workers for the company and they had the option to buy a couple of shares and they took that option. And, for a while, they were just holding on to those shares. But when that company reached unicorn status and went public, they became overnight millionaires. So, in this case, the Davids, the Reddit group, drove the prices of the GameStop stock up in order to create losses for the hedge fund groups and create gains for themselves. So how did they do this? All right, so GameStop was part of what was called, or what is called, short selling. Now, one of the hedge fund big shots actually sent out some kind of communication stating that GameStop was doing poorly, so, they were going to bet against that and create, a short sell. They were going to short GameStop. So here's what this means. Short selling happens when a professional investor borrows shares of a stock that they will actually bet on dropping in value. Now, this is typically done through a broker who will, attempt to borrow these stocks in your behalf. And again, the key is that you hone in on a company that is not doing well. And you borrow stocks from someone or shares of stocks from someone who already has those shares. And what you're hoping to do is borrow them, sell them immediately, and hold on to that money. Now, why would you do that? Okay. Remember that in short selling, you are hoping that this stock is going to decrease in value. That's what you're betting on. So you're betting on being able to take the money that you just received from selling the stocks at the level where they are and waiting until they decrease in value and buying them again or buying them back at the lower price. Now remember, because you've borrowed them from someone, you have to return those shares. However, there's this matter of the money that exists between the money that you got when you initially sold the shares and the money that's left over, because when you bought them back, you bought them back at a lesser price. Okay? Now, here's what happens with that on sort of real terms. Let's say, for example, that a share is borrowed and is sold for $10. The short seller will hold on to that $10. Then let's say that the shares go down to like $2 a piece. Well, the short seller is going to buy the shares back so that he can, or she can, give back what they borrowed. But because they initially sold for $10 and only had to buy back at $2, there's $8 difference. Now that $8, they get to actually pocket. That's their profit. I will say this, there may be some fees that they owe to the broker called stock loan fees, okay? So other than that, they get to keep what's left. Now, for a lot of people, especially if there are a lot of shares involved, and especially if the prices drop low enough, for a lot of people, this is a windfall. Now, imagine hedge fund companies where they deal in billions and billions of dollars. Imagine them short selling, and they have all of these shares that they've bought or that they've borrowed and have sold at one price. and then bought back at another lower price. And then they get to pocket all of that money that's left in between, minus maybe some, stock loan fees. Okay? Now, in this case, again, the hedge fund companies were betting against GameStop and were short selling. Hold on to that thought. Now, that would have worked, except here comes the Reddit Wall Street bets. They created the perfect nightmare for the hedge fund short sellers. They created what is known as a short squeeze. And if you squeeze something, you're getting every last bit out of whatever that is. So here's what happens in a short squeeze. In a short squeeze, some entity drives up the price of particular stocks, okay? And in this case, this was done by the Reddit group actually getting online, sort of getting behind GameStop, and actually almost pretending that they were going to, do all of this buying of GameStop stock. And it created a situation where, because of the talk, the stocks literally went up in price, or the shares literally went up in price. Now, for the Reddit community, if they actually have any of those shares as well, now their shares are worth a whole lot. However, that's good for them. But that's horrible for the short seller, because now the short seller that was betting on the value of the share decreasing, they're watching these shares going up in value, and now they're stuck. They may have borrowed these shares and they have to return these shares. So now they have to sort of hurry up and try to buy back these shares, even though the price is now higher than they want. And they have to buy back these shares, as many as they can, to return as many as they can at whatever price is available now, in order to minimize losses. And more than likely, there will be losses. And in some cases, there may be losses to the degree not only that they lost in that they didn't make any money, but they may have lost some of their own money to try to front, the difference, so that they can actually return the shares to the original, people and entities that they borrowed from. So let's do this in a real world example. So if the short seller, one of these hedge fund companies, borrowed a share and sold it for $10, as in our original example, instead of the price of the stock or share going down and allowing for the making of a profit, the price goes up. And remember, the price was driven up by this group of non-professional traders who knew that the hedge fund company was betting against GameStop. And they created the perfect storm. So once they started talking, it drove the value of the shares up. Now, if that share, which was sold at $10, is now only able to be bought back at $20, you see the problem? So the hedge fund companies were then scrambling to simply buy back at minimal loss. All right? Now, again, as I said, this is going to create a situation where any short seller, they're all going to be clamoring to get back these shares, to buy them back. They know they're going to take some losses, but let's say, for example, that if they bought a share at $10 and now they can only, if they sold a share for $10 and now they can only buy it back for $20, that's better than $25 or $30. So they're clamoring to buy it back at the $20, and now there is a frenzy. Unfortunately, because there is this frenzy, this is now a never-ending cycle because that frenzy in and of itself is driving the price of the stock or the share up even further. So now take a stock like a share like GameStop. Why do I keep saying GameStop? GameStop. At one point, GameStop shares were like $3 and some change, almost like $4. And they actually got up to like $500 a share. Now, imagine the money that is lost by the hedge fund companies. They lost billions. And as of one point Friday, they said that the hedge fund companies had lost like about $19 billion. Now, you know, where there's money, there's power. So you know that by now they're mad. So now enter Robinhood, which is the online free trading app. Now, so Robinhood, you know, has some explaining to do because a lot of this trading is being done right there on their app. So in order to, you know, appease the hedge fund groups who have the money but who are taking some serious losses, they suspended the trading of the Reddit group. And that forced the Reddit group into a situation where they could either hold or sell their shares, but they couldn't buy anymore. Okay. Now, Robinhood did reconsider, and it wasn't just Robinhood. I will say that it wasn't just Robinhood, but they're the ones who are also at the forefront of this. They did reconsider and allow limited trading on Friday. But after supposedly raising $1 billion from investors in order to comply with federally mandated capital requirements, they did reconsider. Now, that didn't stop the lawsuits. Okay, that didn't stop the lawsuits. So we will see how this all ends up. On a side note, though, and this is the video. As you can see, if you're looking at the video that I'm sharing right now, you can see that Trevor Noah's face is right superimposed on someone else's body. But you can watch the video when you see the post in Facebook. However, on a side note, this also caused billionaire Stephen Cohen, who is the founder of the hedge fund Point72, and he's also the majority owner of the New York Mets, who was reportedly worth a whopping $14 billion, to delete his Twitter account because people started threatening him and his family. On a more positive note, the leader of the Reddit community group, the Wall Street Bets, it is said that he actually made about $14 million. And one person, I'm not sure who it was, who actually had like $50,000 worth of shares. They had like 50 million in the end. Now remember, there's risk involved, so they could have easily lost the $50,000. But the risk worked for them this time, and they ended up with like $50 million. There was also a 10-year-old boy. It was so cute. And his mother, he liked games. So around about, I guess, 2019, for Kwanzaa, his mother bought him 10 shares of GameStop stock. And they were like $6 and some cents per share. So she bought about, almost like $70 worth of stock or shares for him. Well, she said she started getting all these dings on her phone. And when she looked up, they had like $3,200. So she said she actually pulled her son out of virtual learning and like, listen, what do you want to do? So he decided to sort of cash his in, and he's going to take 1,000 of that and reinvest. I mean, that is awesome. But let's also then talk about some of the tragedies, because I did hear that in this whole thing, one young man actually bet or used the collateral for his parents' home without their permission in order to participate in the short sale. And now he has lost. So I haven't heard the end of that story. But he is frantic, obviously, because now he doesn't know what in the world is going to happen. His parents didn't know. They did not give him permission. And I honestly don't even understand how he was able to do that. So I'm pretty sure that's going to be a legal matter in and of itself. But again, people, this whole thing had to do with options trading. Davids and Goliaths. In this case, hedge fund company, Melvin Capital, and some others, and Reddit community amateur traders, the Wall Street bets. The hedge funds created short sales betting against the success of GameStop and some other companies. But they bet wrong because the Reddit community got behind GameStop and with their talk and their chatter drove the prices up. And that forced a short squeeze, which then further shot the prices of the stock up and thus created billions of dollars of losses for hedge fund companies, and in some cases, millions of dollars of gains for the little guy. So I hope that I have done an adequate job of sharing this information, and hopefully you've learned something. This video is killing me though. I'm scrolling up and down, and I'm trying to get to a spot where we're no longer looking at these two people in the bathtub. But anyway, if you have any questions financially, talk to us. We can service those who are in Pennsylvania and New Jersey for credit repair enrollments, but we also offer services sometimes through other companies who are also licensed and bonded in all areas, and we can assist you. So please contact me. I'm Christine Jones. I am the owner of Clear Choice Financial Solutions, LLC. You can reach me at 215-901-7651. You can also reach me at 888-404-5815. You can leave a message there. And you can send me an email at crjones@clearchoicefinancialsolutions.com. Have a wonderful day. And listen, get in the game. Try some investing.